Mr. Amit Dixit, Senior Managing Director, Co-Head of Asia Acquisitions and Head of India for Blackstone Private Equity, and Mr. Nitin Rakesh, CEO of Mphasis. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shiv Mattu from CDR. Thank you, and over to you, sir.
Yeah, thank you, Raymond. Good morning, everyone. Thank you for joining us on this call today, which is organized to discuss the transaction announced by Blackstone. As announced earlier, I think we have with us today Nitin Rakesh, CEO Mphasis, and Amit Dixit, Co-Head of Asia Acquisitions and Head of India for Blackstone Private Equity. Before we begin this call, a reminder that we are in a silent period, and on this call, we would like to limit all discussions to the transaction announced today. A separate call will be organized to discuss Q4 financial and operating performance after the results are announced. I now invite Nitin to begin the proceedings of this call. Over to you, Nitin.
Thank you, Shiv. Good morning, everyone. Thank you for your participation with short notice and for your continued interest in Mphasis. On the call today, I have with me Amit Dixit as well. Most of you know him or know of him. The reason we are here today, as you all know, is the press release a couple of hours ago that was issued by Blackstone. Blackstone announced that private equity funds managed by Blackstone have entered into definitive agreements to acquire a majority stake in Mphasis Limited. While Blackstone has been a majority shareholder since 2016, this is a fresh recommitment from new Blackstone funds along with new co-investors. While both funds are managed by Blackstone, the underlying beneficial ownership of the acquiring funds is different, leading to a change in control, which triggers the open offer under the takeover code. Blackstone will commit up to $2.8 billion in Mphasis. Notably, Abu Dhabi Investment Authority, the Regents of the University of California, and other long-term co-investors will co-invest along with Blackstone. This is a particularly gratifying and proud moment for us at Mphasis. I'd like to invite Amit to talk about this transaction, and then I'll make a few comments after. Amit?
Thanks, Nitin, and the feeling is mutual. We are also very gratified and thankful to management for their outstanding contribution over the last 4 years. Information technology and software services has been a strong sector for value creation and wealth creation for India for the last 2 decades. And this story will continue. And Mphasis is backed by strong secular tailwinds, because fundamentally what's happening is global enterprises are increasingly migrating to the cloud. As we all know, in the last 1 year, majority of our interactions with our own colleagues or customers, employees, all have been over the cloud through WebEx or Zoom, what have you. And that's the fundamental tailwind, which is benefiting Mphasis. In addition to that, the management team at Mphasis is terrific. Outstanding partners to Blackstone, and they've done an outstanding job over the last 4.5 years. Average experience of more than 20 years. Mphasis also has a very unique tribes-led model, which has led to a very strong order backlog. As you all probably know, highest ever total contract wins in the last 9 months. Mphasis is not a new company. This is the best ever 9 months we've had in the last 20 years. We're thankful for our customer support. The customers are top 10 customers have an average tenure of 19 years. So long-term strategic deep customers. Also, among other areas, Mphasis is particularly strong in financial services. It serves 35 out of the top 50 American banking and financial services firms. And overall, this business model affords very strong free cash flow generation, very high return on invested capital, low capital intensity. And the company's fundamental tip of the arrow is a very strong suite of cloud and digital offerings, which is what's leading to very strong revenue momentum. So we, as you know, Blackstone first invested in this company in 2016. Even at that time, we believed that Mphasis will be a 10 to 15-year growth story, not the typical 4 to 5 years. So we are super excited that this investment enables us to continue the value creation agenda for a long term with continuity in the management team, continuity in the board, continuity in customers, plus obviously we provide additional resources, capital or clients to accelerate this growth momentum. So as Nitin mentioned, we are committing a very large amount, $2.8 billion, to acquire a controlling stake in Mphasis, and marquee long-term sovereign funds and pension funds, Abu Dhabi Investment Authority, the Regents of University of California are also co-investing, which tells you the commitment and confidence not just Blackstone have in this company, but also the sovereign funds who don't have a fund structure, they have in the value creation for the long term. So with that, let me just pause here and pass the microphone back to Nitin.
Thanks, Amit. Continuity and acceleration is the theme with which we at Mphasis are seeing this next phase of our journey. We started this transformation partnership back in 2017 with a strong partnership between all key stakeholders, especially the management, Blackstone, and our board. We've been able to see consistent execution across all key metrics and have continued to strengthen our position with key clients as well as added significant new growth engines. Our investments in building market-leading capability in digital transformation through tribes and squads has borne rich dividends to both our clients, employees, as well as set the foundation for significant acceleration as witnessed by the deal wins in the last few quarters. We see this transaction as a continuity of Blackstone's commitment and a vote of confidence in Mphasis, in its management team, and our ability to build on what we've achieved in the last few years following Blackstone's first investment. We're also delighted that blue-chip sovereigns and pension funds such as RDI and Regents of University of California specifically committing to Mphasis through this new fund and the testimony of long-term commitment and a vote of confidence of a solid set of shareholders. We see this investment as having several positives for us, some of which I would like to list. One, continuity and acceleration, as I just mentioned. The management team of Mphasis is committed and will continue to lead the organization. There is continuity of management and strategy. In other words, it is business as usual for us at Mphasis, with the growth-leaning stance of the company further reinforced as we look at building on the momentum we built in the recent quarters. Two, expanding opportunities within the private equity channel. We will continue to find business opportunities in the Blackstone channel. In addition, we can also explore opportunities from the industry firms of co-investors, thus expanding our private equity channel. This, we believe, will provide an additional opportunity for growth. Three, addressing investor perception of sponsor sell-down. In a conversation with some of you, we've cited some investor overhang because of the perception that there could be some sponsor sell-down. This recommitment, we believe, should put to rest such perceptions, given the Blackstone's typical holding period in its investment is between 5 and 7 years. Blackstone believes that there is significant value that can be continue to create in Mphasis over the next 5 to 10 years. On that note, let's open it up for questions, please. Operator?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Sudhir Guntupalli from ICICI Securities. Please go ahead.
Yeah, thanks for giving me this opportunity, Amit and Nitin. I have just one question. Now the share price is around 1760 rupees. But in just a hypothetical scenario, given the heavy market volatility, let us assume if the open offer gets completely subscribed at 1677 rupees, then how do we, what are the legal aspects around it? Because I think that then Blackstone stake will exceed 75%, right?
So I'll take that question, but I think the takeover regulations as well as the listing regulations don't allow for the promoter stake to go above 75%. So any purchase will be capped at 75, and whatever is the excess stake that is left by the selling funds will have to be retained by the selling funds for a period of up to 2 years, I think. I think that's or 12 months. I'm not sure if it's 12 or 24 months. That's the exact nature of the regulations, and we'll follow the regulation to the T as we follow through this process. So I think that's pretty much it's also laid out in the public announcement that was made this morning on the exact nature and scope of how this will play out.
Sure. Thanks, Nitin. That's it from my side.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to ask questions. The next question is from the line of Abhishek Shindalkar from Elara Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just a follow-up to the earlier question. It seems that there is a mention that Marble PT may own 7% approximately in case the entire 26% comes through. And there is also a mention that it will be classified as non-promoter. So does that kind of anyway change, the selling structure for the 7%? Thank you.
You actually answered your own question. Marble 2 PT, which is the existing promoter, will be declassified as a promoter and will be reclassified as a public shareholder. So they can retain, the 7% as a public shareholder, but that will not be given the structure and the underlying beneficial ownership differences. That's a completely different segment of shareholders. So there is no time limit for them to actually sell down or hold because there will be a public shareholder beyond the open offer. Once the open offer is closed, they will be declassified as a promoter.
Yes, thank you. So does that mean that 24 months period, does not apply to that 7%? Is that right?
Does not apply to the 7%. They are a public shareholder. It does not apply to the 7%.
Thank you. Thank you for taking my question and best wishes.
Sure.
Thank you. The next question is from the line of Sandeep Shah from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. Just a clarity. So in the case this 100% goes through as an open offer, there is no lock-in for the existing Blackstone private equity group holding, which can be close to 7%. Is it a right understanding?
Again, as I mentioned, right, once they are reclassified as a public shareholder, then whatever the norms are for public shareholders apply to the same entity.
Okay. But there is no contractual lock-in for them in that scenario?
Not to my knowledge.
Okay. And second, it's needless to ask, but this arrangement does not change any business prospects with DXC. I agree it's not a right forum, but with this share purchase agreement, there is nothing changes in terms of business, right?
You answered your own question.
Okay. Thanks and all the best.
Thank you. The next question is from the line of Dipesh Mehta from MK Global. Please go ahead.
Yeah, thanks for the opportunity. Just want to get sense about the co-investment with some of the long-term investors. Can you provide some detail how the structure will be and what kind of investment they are making in the overall transaction structure? And second question is about whether this 75, you said earlier also they can cross 75, but whether intention-wise it is only 75 and that's why Marble PT will retain some of the stake. So that clarification will help. Thanks.
So, Dipesh, I'll answer the second question first. I think very clearly we are following the takeover code regulations, which say, as well as the listing regulations, both have to be followed. So the moment there is a change in 25% or more underlying beneficial ownership, it triggers the change in control provisions and the takeover code, for which you have to make 26% open offer minimum mandatory. However, the listing regulations do not allow any promoter to hold more than 25%. So the new buying funds, which will be classified as promoters after this transaction, cannot control more than 75%. which is the reason why there is a theoretical possibility that Marble 2 PTE, which is a selling shareholder, might end up with 7% shareholding, but they will be declassified as promoters and classified as public shareholders. So hopefully that gives you clarity on what the intention is. Intention is very clearly to follow the law and the regulations that are driving this decision and the discussion. On your first question around the co-investors, maybe I can have Amit give us a little bit more color on how this co-investment model works. I don't know if we'll be able to give you specific details with breakdown on numbers, but at least we can give you a little bit more color on how the co-investor model works. Amit? Amit, you there?
Yeah, thanks, Nitin. I was just on mute. Can you hear me now?
Yes.
Yeah, so the co-investors are long-term investors. They don't have a fund structure because they are managing money on behalf of the sovereign of Abu Dhabi or the pensioners of the University of California, respectively. So those are the co-investors. They will be a minority partner in the entity which is acquiring the buying entity. Blackstone will be the majority shareholder in that entity, and we expect the co-investors, one, given their long-term orientation, to provide a very long-term ownership structure in this company, and number two, these are very large investors into companies globally, and hopefully that will unlock more portfolio company business from these investors also, in addition to Blackstone.
Thank you.
Thank
you. The next question is from the line of Rishit from Nomura. Please go ahead.
Hi, thank you for giving me an opportunity to ask the question. Amit, while I understand the maximum price for Marble PT shareholders will be 1450, right? Maybe I'm missing something, but if you could provide me a little color on how did we arrive at the price, and given it's still at a 15% discount to the current price, right? So will the shareholders be comfortable with that sort of discount?
Yeah, thanks, Nishit. So the purchasing price for the buyers is 1452 to 1497 per share. It's a 12 to 16% premium to the 12-month average price, and it's like a 3-ish% discount to the 6-month average price. And the open offer is at 1677, which was in line with the market price, which was closing on Friday. So it's as you know, in the change of control transactions, these are negotiated prices, and that's how the price is going to work.
Okay, so typically we look at the 12-month average price.
12-month average price.
Because in the last 12 months, the share price would have changed materially across board. So, but that's the way to look at it. Okay, perfect. Okay, I think that's all from my side. Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah, good morning. Thanks for taking my question. So I have a question for Amit. Amit, we know, of course, Blackstone is a long-term investor, and that's what we've seen after the investment into as well. But at the end of the day, we are a private equity firm. So just wanted if you could provide some color on the new fund that would probably now be assuming the ownership of Mphasis, as to what exactly is their investment horizon period, and basically the fund size or any specific details that you could probably share with us, which would help us as investors in Mphasis to get more visibility about the horizon of the Blackstone investment in Mphasis.
Yeah. No, good question, Vibhor. See, overall, even when we first invested, we always thought this is a 10 to 15-year story because the secular tailwind in the IT services sector are very strong. That's the reason the sector is the single largest wealth creator in India for the last 30 years. And now cloud migration, especially with this pandemic, is providing a big fillip to the whole sector. No pun intended. I know your firm is called Phillip Capital. But So this is providing a fillip to this entire sector, which is going to create another 10 years of massive revenue momentum, and that's why you're seeing the order backlog at Mphasis as it has ever been in the last 20 years. Now, to your specific question on our funds, see, our typical Blackstone fund is raised for a period of 10 years. And so the funds which are sort of buying into it, they are also 10-year funds. So overall, you should assume 7 to 10 year life of these funds now, going forward into the future. Plus, the co-investors who are coming in, as I mentioned, they don't have a fund structure. They are sovereigns and pension funds, so they have technically their life is infinite.
Right. So I can assume that the remaining life of the funds that are investing in Mphasis have a remaining life of around 7 to 10 years.
That's right.
Sure. Great. That's all from my side. Thank you so much for taking my question, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Abhishek Bhandari from Macquarie. Please go ahead.
Yeah, Amit, I have a question for you. So will the board change or expand to accommodate the new minority long-term shareholders?
Abhishek, I didn't get you.
Your voice is not very clear. Yeah. Can you go slowly, Abhishek? Voice was not very clear.
Can you hear me now?
Yes, but go slowly. Yeah.
Yeah. So will the board, structure change or expand to accommodate the new minority shareholders, the long-term shareholders?
So the current board will remain the same. That's the idea. And then we will decide going forward on if you want to expand the board.
Sure. And I think in your prepared remarks, you mentioned that, the new takeover probably will give more access to private equity clients for Blackstone, for Mphasis. So could you help us understand how that would work in the sense that will it be similar thing to what you helped Mphasis in your earlier investment by giving access to your portfolio companies? If so, what could be the universe of that portfolio company under this new investment structure?
Yeah. So it's as you know, Blackstone manages now $650 billion of assets globally, and in a variety of companies. And I don't have the number of the total IT spend, but that IT spend is in billions of dollars. And so that entire portfolio, not just in the US, but in Europe and Asia, will be available to Mphasis. And Mphasis is the only IT services investment in the entire global Blackstone portfolio. So it's not like we have 5 investments and Mphasis is one of them. Entire global portfolio, this is the only company. So obviously they have to compete to win the business, but they are very uniquely positioned. So that's just Blackstone itself. In addition to Blackstone, the University of California and ADIA, these are coming in. These are again hundreds of billions of dollars of assets under management, sovereigns. The universities themselves, by the way, can be big customers. Forget their portfolio companies, but universities also have very large IT spend. So I think those are the additional channels we plan to tap into. And I think the other area, which I think Nitin briefly mentioned, the company has $400 million of cash on the balance sheet. I think that could be very strategically used for strategic M&A, because to bolster our revenue momentum. And we did, 2 small acquisitions, if you remember, in the last 4 years, Intelligent and Data Links. But we could do something more chunkier this time around. So that could be another growth vector going forward.
Got it. Thanks, Amit.
Thank you. The next question is from the line of Sandeep Shah from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. Just follow up to the previous question. Just to get a clarity whether the addressable market within the investing company of Blackstone channel post this transaction will go up or may remain more or less similar what it used to be earlier as a whole?
It will actually go up
No, let me go.
because...
Yeah.
Sorry, go ahead.
No, go ahead. I'm finished.
No, I think it will go up because see, the Blackstone is not a static pool. We are constantly buying new companies, and that's why our AUM constantly increases. And the more you get into an opportunity early on in the investment, the better. If a company's been in a portfolio for 5 years, hard to extract an incumbent and go for a new IT business. And it's a new company, new acquisition which is being made upfront. Because in almost all our investments globally, a productivity improvement program, which is what we call it, and a part of a productivity improvement program comes from IT offshoring. It's a thesis in every single company. So those new investments, Mphasis is uniquely well positioned to go after.
Okay. Thanks and all the best.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Sumit Jain from Goldman Sachs. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats, Nitin, for a great execution over these last 4 or 5 years. So just continuing from the previous question in terms of finding opportunities in Blackstone portfolio companies, can you briefly comment today what part of direct channel are the Blackstone portfolio revenues and any long-term visibility now you have given that this fund from Blackstone have maybe 7 to 10 year visibility? Can you briefly comment on the overall TAM on that part of the business?
So Sumit, I think what we'll do is we will give you a little bit more color on that in the Q4 earnings and the FY22 outlook call. And we'll also try and see if between now and then we can get a little bit more color even on the new portfolios that we will have access to. My sense is probably will take another quarter or so for us to give you that breakdown. But as Amit mentioned, broadly, the total addressable market in the Blackstone portfolio itself has actually gone up quite significantly, given just the momentum that Blackstone has had in acquiring stakes. While the nature of some of those investments has also changed. So we'll give you a little bit more color on this when we do the Q4 earnings call.
Got it, Nitin. My second question was around the scope for large deals. I mean, we have seen few large deal announcements by Mphasis over the last 2-3 quarters. But generally, we have seen, clients in signing up these large deals want to have a visibility about the stability in promoters. So do you think, given the opportunity we have in front of us around cloud migration, digitalization, this commitment by Blackstone would further increase the scope of large deals in coming quarters?
So I think that's a good question, except that, given that statistic that Amit gave you, that, the tenure of our, average tenure of more than 19 years with top 10 customers, I don't think, that, there was a lot of concern either way. Of course, the recent last few months of speculation in media had created a little bit of, questions, but I think we managed that pretty well. So this will definitely provide a boost and a vote of confidence from the world's largest private equity investor. Will definitely give that additional comfort that is needed to construct some of these larger transactions as we go forward. But I think the first 9 months of TCV momentum, despite some of these uncertainties, has been a fairly strong validation in our differentiated service offerings, and what we have to offer is being appreciated. So I think that will continue. We'll continue to make sure that we stay ahead.
Got it. Thanks, Nitin. And maybe one question for Amit. I think Amit, since a lot of senior managing directors of Blackstone are there on the board of several Fortune 500 and G2000 enterprises. I mean, what you are hearing from your colleagues in Blackstone as to in terms of COVID, how has it changed the positioning of Indian IT industry altogether? And will we see offshoring as a secular tailwind going forward, even when we return back to the pre-COVID levels, maybe 1 year, 2 years down the line in terms of travel returning back? So what has happened or changed in terms of positioning of the industry, if you can briefly comment?
See, good question. As you know, putting our money where our mouth is. It's a massive commitment, $3 billion into the Indian IT services sector, into Mphasis. So we have put the money where our mouth is. We think, as Blackstone globally top down, we have identified, 8 themes as multi-decadal themes. I'm not talking about just private equity, but I'm talking about the 650 Blackstone enterprise. If you look at the topmost level across private equity real estate, there have been 8 themes which Blackstone believes are multi-decadal trends, and some of them have been accelerated by COVID. And cloud migration is one of those 8 themes. So as a firm, you will see Blackstone across the board actually doing a lot around cloud migration. So that's our overall big picture, 100,000 foot view on this trend. To your question, is it secular? Is it cyclical? Clearly, there is a boost with the pandemic which is coming in. But having said that, this is actually secular. Cloud migration did not start with COVID. Cloud migration started many years before that. But COVID provided you the acceleration. It's very simple. Today, any enterprise cannot communicate with its customer or its employee unless it does a video conference, WebEx or Zoom or what have you, over the cloud. You don't have any other option. So I think that has really forced the global enterprises to rethink that, what is my IT model? And I think that anyway cloud was happening, this is providing the acceleration and it will continue. And I think this is showing in the order backlog, not just for Mphasis. You can look at the Indian IT, look at Infosys, look at TCS, look at HCL, look at Wipro. Every one of them has had, probably one of the best years ever in terms of order win momentum. Number one. Number two, your other question about new deals. You have seen Mphasis do new large deals. So have other players also. So both, I think, in my view, is you will see longer term digital adoption actually continue. And the trend towards larger deals will also continue. Even deals within Blackstone also, even what we used to do 5 years back, now has completely changed. The size has changed by 5x. So even we ourselves, as one client, deal sizes are materially larger. The last point I would make is the reason why this sector continues to hum is because a natural hedge to currency. You get paid your revenues in US dollars, and a part of your costs are in local currency, in let's say India or not. And as you know, rupee has had a tendency to depreciate it's about 2.5% over the last 75 years. And India became independent, the rupee to the dollar was 1:1. Today is 1:75 after 75 years of independence. So 1 year we have lost every year of independence. This sector, every sector in India, as you know, wage inflation is a real issue, but that rupee depreciation helps you absorb the wage inflation because rupee, again, as you've seen, has gone from 73 to 75.5 just in the last 2 weeks. So I think that is another aspect where it's a very unique sector, and that's why you see this sector humming for more than 20 years now. The natural hedge to currency provides in a relatively asset-light model with low capital intensity allows for very good free cash flow generation and very good dividend distribution and so on and so forth. Anyway, let me get off my soapbox, but I hope I've communicated my enthusiasm.
Thanks for that insight. And maybe one last question for maybe Nitin. I think in terms of investment into the business, Nitin, any areas in terms of geographies, service lines, or digital capability we may look at now, which was holding our hand maybe in the last 6 to 12 months, given the way the market is shifting now?
So again, Sumit will give you a little bit more color on the Q4 earnings call, but broadly, I think we've been very focused on not only continuing to grow our existing book of clients, wallet share gains, but more importantly, adding what we call the new engines or new drivers of growth. So I think all the investments we've made, will continue to monitor them, expand on them where we think we need to. So there will definitely be additional areas of investment, both on the competency side, on the vertical side, and even on the geography side. We'll give you a little bit more color on that as well when we do the Q4 call.
Okay, great. Thanks a lot and all the best.
Thank you, Sumit.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to Mr. Nitin Rakesh for closing comments.
Thank you, operator. Again, just in closing, we are gratified to continue our partnership with Blackstone, both as a leading investor as well as our leading client channel. We believe Blackstone's sustained strategic partnership will help the company accelerate its growth and scale new heights. Sovereign and pension funds co-investing is a testimony of long-term commitment as well, and a vote of confidence of a solid set of new stakeholders. Thanks again, Amit, for joining the call, and thank you all for spending the time, and we look forward to seeing you on our next analyst call.
Absolutely, Nitin. A big thank you to you and all the management and employees of Mphasis. Also, a big thank to the investors and analysts, all of you who are on this call. Thank you for covering the company and supporting the company. Also, a big thank to Mphasis clients who have been with us for long periods of time, and an outstanding board that we have at the company. So a big thank you to all the stakeholders and participants in this journey, and a very, very warm welcome to our co-investors in RDI and UC regions. Thank you.
Thank you, guys.
Thank you very much. On behalf of Mphasis Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.